Hello, my name is Nedu. I'm your forex coach. In today's signal video, I will be analyzing GBPNZD. Okay, and this will lead us to discovering a good trading opportunity that can give us up to up to 500 pips. Okay, let's go. From 2023 January, the GBPNZD had been on a strong bullish run, but from March last year, 2025 till date, he's been trading around this box without much direction. Expecting a breakout maybe on the upside, or he's going to come back down to support. So here is seen as a level of support, it's a resistance, and here a level of support. That is the case with this currency pair, technically speaking. Okay, you observe the dotted lines. Those dotted lines are my zones. We call them key levels. Okay, zones where price or turning points where price will get to and reverse, break through, and continue in a particular direction. So for now, GBPNZD is right here. It's right tied into this box, expecting either a breakout upside or breakout from the downside. But whichever happens, the support and resistance zones have been holding up until now. Okay, so I have a good of course, you can see this is here. Here is a low, here is a high. This is a high, a low. No high has been made here. Okay, so expect a new high. No new high has been made. So this place is not a low. Okay, so from here we can identify a supply zone which, okay, price got to, it respected it, it worked and came down to the zone. So we're going to apply a lot of principles here, including candlesticks patterns. In my previous videos, you would discover where I use candlesticks and I place a premium on candlesticks patterns. They should reveal a lot about what the market is doing. They reveal a lot about what the market is doing. And particularly when you find these candlesticks patterns at a zone, whether support or supply, resistance, or demand zones. Okay, this weekly time frame, at least we have seen the direction. This weekly time frame has exposed to us that GBPNZD is on a bullish trend and presently is trading between support and resistance here. All right, so this is resistance zone, and here is seen as a support zone. So it's been trading between these two zones for now. All right, and you can agree with me, price has this, nature, and price moves from zone to zone. If it breaks the zone, most of the times it comes to retest that zone, which we call confluence, and it pushes up again, gets to another zone. If it breaks it, if it tests it, it continues, or you can come back here, push all the way back, and now starts coming down. The market environment is liquid flowing from uptrending markets to sideways markets and then downtrending markets. Okay, here we can observe that the price has not broken this resistance zone. So what do we look for? Most likely, if the price hasn't broken that resistance zone and there is no new high formed before this last day, weekly candle that you're seeing forming here, this small red candle, the red candle most likely may come all the way back down to supply or get to midway, okay, and go back up, maybe going back to break. It can also move all the way back down to this place before it eventually finds its way back up. So there are a lot of possibilities, but we're going to look at it one after the other. So let's move to the daily time frame. On the daily time frame, this is what we find. This is what we find. This is our resistance zone. We have done a little work here earlier. This is our resistance zone. Trying to make this neat for you so you don't see what you're, don't get distracted by all this. Okay, be watchful of this dotted line is a key level, weekly key level, and how the price has repeatedly been respecting that zone. Here, it tested it here, tested here, tested here, rough times tested here. Okay, before coming back to the support zone, again tested. So we are seeing another retest on resistance at the key level. That's the watchword, at the key level. Look at here. Let's look at this Excuse me. This is the support zone that we created on the weekly time frame. Okay. So here, price got here, just common candlestick analysis got here and made this bullish engulfing pattern, which is a reversal signal from a zone. And that led to this massive move from here all the way to the next zone, about 850 pips from here back to the next zone. On the daily time frame, we can see touches at these levels. Price has been touching all of this level. And here we'll find an engulfing pattern, but this time this is a bearish engulfing pattern. This is a bearish engulfing pattern that formed at this key level. Look at it. Bearish engulfing pattern. Observe this. And this most likely, since this is a key level, and price has given us a footprint for a bearish, possible bearish move down. So we may not be able to say that it's going to move all the way down from here down to the support zone, because price moving between resistance and support zone now. They're able to do all of these. But one thing is certain, is going to move. So we take as much as we can, identify a zone here, which is a demand zone. So demand zone from here. Okay, that's one. And from the low to the high, we're going to use that Fibonacci retracement tool from this low and drag it to this high and check the area. Fine. Between 550 and 61.8% is exactly where the demand zone is. So I'm having a strong conviction. And of course, you can see here, price made this move and then got to this place, did this consolidation, and now moved. Now it may get back into that consolidation area before going up to break, because um, the consolidation has overstayed. Might just move all the way and break this zone. And of course, the comparative analysis of fundamentals on the United Kingdom and New Zealand, it favors the pound at the moment. I may have to explain that in another video. It favors the pound. So there may be some corrections happening from here into this zone, and price will move. So this is what we're going to do. We're going to look for entry from here. It is going to be a swing trade. It's not something you trade and expect the whole move to happen in one day. Okay, this high somewhere there. We're going to put a stop loss here. Entry, and do an direct entry. See, we are looking at entries from the higher time frame, because this is okay, midway into the descent around that 50%. You can do that, or we can also take it from, you can also take it all the way down to 1.8, because all of this is zone here is a reversal zone. Is a reversal zone. So we're going to see how this will play out, and price gets to this demand zone. We'll look for some confirmations before we can sell back to this zone and possibly extend it to this minus 0.2726 percent and put our stop loss just here. This to be the counter trade. The price eventually gets to this place. Okay, I'm going to bring in updates on this before the end of the week, and then we'll measure and see how this has played out. I'll see you again in my next video. If you like this analysis, so please click that like button and also the bell and subscribe to the channel, so you can be the first person to get this analysis, similar analysis, the next time we drop a video. Thank you.